Hi friends, welcome back for Bitcoin Technical Analysis. It's Saturday, it's the weekend, but we keep going anyway. Thank you so much for joining me, spending your time on this weekend with me watching this Bitcoin Technical Analysis. It's super appreciated, I really do appreciate it. So thanks so much. Like, subscribe, all of that good stuff. Now what have we got up behind me here? This is the CME chart. Now I could of course look at the current price of the CMEs, but we know that it's closed. But it's 6,800 was its closing number as it happens. But we've got this rectangle drawn on here. And what's that for, you ask? Well, I hear you asking, and and it just shows us where the prices would if this shows us the top of the wick on Friday and the bottom of the wick on Friday. So when we look towards Monday, we can see if there would be a gap showing up potentially on this chart. We'd need to see the prices in a relatively, they'd have to be operating below what the CMEs would work at. So let's just take the numbers as they are for now. 6,625 to the downside and 7,100 to the upside. So if the prices are above 7,100, then we're going to potentially have a gap to the below us, and if the prices are below 6,600, then we're going to have a gap potentially above us. So we can kind of, now we've got that covered, score that off and go back over to the regular charts. And let's take a look at Coinbase just real quick here. Because it cleared everything off, and I just wanted to sort of say, well, okay, so what do we have on the go here? There's a few things kind of working for us and working against us in terms of Bitcoin over the next wee while, and of course, the CMEs in and of itself is kind of a neutral thing. It's just to be aware of what's going on there. But what have we got in terms of the pro cases and the negative cases? If you're bullish, or the bullish or bearish cases or whatever. So let's start off kind of looking at things then, I suppose, from a slightly bullish perspective. Just for a second, I suppose we'll flick between them, build up a picture, but you've got this Fibonacci retracement drawn in here on this chart. This goes body to body at the moment, and you can see the 236 comes in at 6,200, and we're currently a ways above that just now. And we've come up here and we've got to the 382, and that's good. You know, it's all part of this overall process. We've put in a high here compared to our other highs on the daily charts, and we've had a higher lows as well. So we're continuing to make higher highs and higher lows on all that good stuff, okay? And this is happening above the 236, so that's a bullish thing, and we have potential targets in mind. Of course, you have this 382 in here, and you have the at $7,000 where we've seen the prices come up to a couple of times, and you also have the 618 to the top. You know, if you're being kind of greedy and looking at that golden pocket up there, $8,300. But you could also look towards that median line there at 50% line at $7,628 as the next potential stopping profit taking zone. Okay, all that sort of stuff, that's all kind of bullish sounding and nice, and we know that we've been up here sitting in these, you know, breaking new old ground again. Looking to the left, however, then where are we as well? Well, we've come up past this sort of crucial area of the 6,200, 6,500, like, you know, 6,450 as we've been talking about on the channel, where we saw the prices at their lowest before the turnaround in December 2019. So we've come up above there, and that's good to see. And how do all these things kind of shape up as well in terms of if this was to be wick to wick instead? So we can just move that down there and catch the wick. You can see there, I don't know if you can see on your screen, but it's there, that's it moved over. So how does that line up? And we know this number is important as well because the 382 Fibonacci retracement number comes in here at 6,400 or so. So, you know, on this particular chart, looking at, oh, no, that's not body to body, or wick to, what is wick to wick? Yeah, sorry, that's what we wanted. And where did we come to, and where did we come past? Well, you know, 5,500 that we spoke of a few times on the channel is quite a ways below us. 6,450 or so, or whatever that level you could see in there is also a chunk below us again here currently from where we are right now, and we're up looking at that 50% retracement area we've come to a couple of times. Can we go up there? And you know, that's that. If we get to there, that's quite bullish because we've had to come so far to get to the 50% retracement. You know, you're looking at 88% just to get up to there where we've been so far, so in terms of from our lows previously. So that's all really bullish. Okay, so we can kind of like put a line under that for now and say, well then, okay, so if that's that and things just continue going, then okay, we can do another couple of things, I suppose. Here we've got this channel, we've come up, we've tested the middle line of it, maybe we can go up to the middle line again. It's only there. Is that a couple of different Fibonacci retracements? We could push past that and go up to these other targets and stuff like that. Okay, but let's just go back to where we were a second ago and take a look at a couple of, from a sort of couple of bearishy or negative or type perspectives. Like, what have we got going against us? Well, I suppose to finish off the bit of bullish side, you could say there's no divergence here over these recent highs on the daily time frame on the RSI. That's good. We've come up to the neutral line here and we've tested above it, and we've been rejected on our first pass, but that always happens. It doesn't always happen, but it so regularly happens. That is not to be, you know, it's not unexpected. So okay, fair enough. That's all the bullish side of things. What negative things have we got operating at the same time for us? Well, you could say that between these two recent highs here on the stochastics, we've had some bearish divergence, and of course that's between these two highs here, and we're not it's not setting the heather alight that this high over here compared to over here. So but this divergence is existing here on the stochastics, a bearish divergence, not on the RSI, and it's also over here on the MACD down below. You can see the bearish divergence between these two highs. If indeed this turns out to be the high, of course, for that to be the case, we'd have to see the prices come back down a little bit anyhow. So if this continues to go up, maybe then that would be negated, and you just see these things continue to go up. The stochastics move up a bit more, and the MACD move up a bit more here in the histogram, and then that would be negated. But that's the sort of currently bearish aspect. And if you're looking for like when was the last time you had no divergence here in the RSI and then a turnaround in the price, you can look to the past here between this low and this low, where there was no divergence here between on the RSI. But over here on the stochastics, you can see there was a touch of bullish divergence there at that time. So you could look towards that and say maybe there's a case to be made. But that's kind of getting a bit ahead of ourselves. What else do we have here? Well, the trend is coming down towards this lower end here. If the ADX goes down below 20, then you kind of think that it's kind of over. And you've had but the blue line hasn't managed to cross above it. That's the positive line. We're crossed above the negative, but we've not made it up to and actually start to turn around this trend and get some strength of trend to the upside while we've been trending to the upside. So all we can really say about this is that the trend to the downside is kind of coming to an end here overall, and with so much bullish price action, that maybe that's a negative thing in of itself. That despite that, we've not got really shown us to have a trend yet here down below, and that's not turned around yet. And we've had this disappointment candles rejection from this 0.5 retracement line here at 7,200 or so, with a hella big wick there on the 4-hour time frame. So you've got all those sorts of things working against us, I suppose. Let's go back over to where we normally spend our time then, and that we've kind of covered the basics or the broader picture there with the pros and cons against us, what we've got going. We've come up here, we've made higher highs, that's good. Could we set in a higher low? I wonder. The easy areas for higher lows to be set in, where you're looking at potential confluence for support, or indeed profit taking. Of course, you've got this 382 at 6,400, 6,500 areas, but right down to the sort of 6,300 area where we have this horizontal line and the edge of our channel here just now. In terms of the next few days, if we were to go down there, of course, earlier, then the channel kind of comes closer to that 6,250 area, where we have this where we have a 236 coming in shortly thereafter, of course, which could also be tested all as part of making a higher low. The higher low indeed actually goes all the way down as far as saying 5,900. You could come outside of this channel in a sort of potential fake out area, or perhaps just in the grand reshaping of the channel to accommodate some other sort of higher low area as we continue to go on up the way. That could also happen. This is rather than being the sort of the pro-bull, pro-bear aspect now. I suppose we could say we're looking at the blended type of aspect of things where, you know, of course, like there's always going to be two sides to every story. So, you know, this would be the bearish price action over a few days. How would that be in effect a positive thing? We're looking at and seeing the volume has been dropping off down the way here this whole time. You know, we've not really had the volume coming in and picking up as we've been going through these certain levels, and we've not really done any of them with a great deal of conviction. You can say that we had conviction going through this 236 over here, and in a way there kind of was a nice, really great candle and everything, but we'd come back we'd had this series of doji candles beforehand. You're feeling this sort of indecision as we're going along, and then this engulfing candle which occurred here, engulfed but then stayed within the overall volatility we'd had beforehand, and you can see that actually this candle that's came all the way as high as on the wick here up at 7,100 was only recently top beaten there in just on the 2nd of April. You know, so we've had this lack of conviction overall in the upward trend as the volume's not really been increasing along with it. So, you know, a couple of things to say which are not, like, you know, not fantastic. How does that really pan out in terms of trading this in these areas? Well, I suppose it just kind of comes down to saying taking profit a bit early and stuff like that. Now, I'm not a financial advisor. None of this is actually financial advice, of course. But, you know, when you're making moves to either direction, then you could sort of kind of, you know, be a wee bit more strict on yourself, I suppose, and just be content with 10%. Now, I'm saying be a wee bit more strict on yourself. You're looking here, you could get a 5% wick just alone on that candle. Just like you've got big moves happening here. Just that you have to actually look for, in a sense, you know, with the wicks and everything else that are happening at the minute. The volatility is around, so just kind of saying to people to not be too greedy if you're sort of trading this on the lower time frames. Of course, if you're trading this on the bigger time frames, that was just an 8.5% drop that we looked at there. If we're trading this on the bigger time frames, then what as well are we looking at? Well, this is where things kind of get a little bit more interesting yet again. You can see over here in the 2-day that we still haven't actually created a higher high on this quite yet. So the question becomes, you know, if we go in and set a higher high in here on the 2-day, then of course then on the 24-hour chart, that bullish divergence or bearish divergence that we spoke about on the stochastics, for instance, in the MACD, would obviously then would most likely then be forgotten about because of the, you know, the push to come up here above this area for us to create a higher high on the 2-day chart, you know. And if we don't, instead, if we go, if that is the high on the 24-hour chart, for instance, we come in and set a higher low in here, then how's that going to look over here on the 2-day chart at that particular point? You know, you're looking in here and saying, well, if the lows come in and they come in at 6,200 or so, then on the 24-hour chart, if it came down to here, we'd still be having a higher high, but actually over here on the 2-day chart, we'd be putting in a lower low as well. So there's a dynamic to be looked at across a couple of days here, which works kind of against the bullish scenario. Of course, it's very easily and rapidly negated, and we can be aware of that as it's happening, but you can sort of look towards this and say, well, hey, look, you know, we've got this dynamic evolving here where you have to take these the initial sort of bullish sort of constructs in mind, like, here, this is how we're doing, and the initial bearish constructs in mind, like, you know, this is now looking like bad here, and then pin them up against what that would look like on a bigger picture, and then a bigger picture yet again, just to see how the dynamics shaping out. And you can see that there's more, it lends a bigger weight to the crucial areas. For instance, you know, coming in above 6,850 and setting in a high on a 24-hour timeline wouldn't necessarily be a high here even on the 2-day timeline, but it's still not really actually managed to quite do that yet. As we look to the prices here of the last wee while, we're 6,800. So, you know, we've still got that concept of 6,850 area in our heads as rocky outcropticians there, still operating with this dynamic that we have. And if we look to the oscillators as it happens over here, the stochastics isn't actually divergent, but we got, you know, we're in terms of, you know, if we still went up, then we'd be higher here in the stochastics than we were here. But we're lower than that right now. So then if the prices did go down, then you could start saying that maybe, you know, this is the start of what could then end up being, over the broader term, bearish divergence. You just have to wait and see how that pans out, or bearish just continuation convergence. You can see there's none on the RSI and the MACD. Well, you know, it's the same scenario should the prices actually go on up, you know, as we were saying with the 24-hour. So then we look over to the weekly weekly time frame and see how things are really shaping up over here. And the weekly candle, this has been a much better weekly candle that you could say than the previous two, in a sense, in terms of its body, in terms of its wicks. It's nothing. It's not really anything to be rewritten home about. In terms of the top side differential here on the weekly chart, from where we've got to, we're talking like less than 3% difference in terms of our highs. In terms of the body here, looking at the differential just as a of interest, you're talking about 16.5%. So in terms of where we've come from and everything this week, and that it's there, but it's the sort of the ghosts of candles past is making it seem sort of less compelling than it otherwise would be. Overall, we've come up to the 50% retrace from having had a drop down, and that's kind of like sometimes enough of a retrace anyway to be had for continuation. And what would continuation look like in this sense? Well, maybe get off of this for a second here, just over here, for instance, and say like this is actually overall a downtrend. We've got this sort of aberration here with this with 10,500 when we came up on Valentine's Day and created a high on the weekly. But this would be your high, this would be your low, this would be your lower high then, and you'd ignore this in between part here, and then that's less of an aberration. Instead, you've just got a high, low, high, low. And essentially then, at any point up until 10,500, really, you could remain overall bearish in this and say, look, on the weekly time frame, we've still not managed to do what we need to do yet. When you're looking on this, this is a downtrend then in that sense, and here's a low, here's a low, here's a low, and on the RSI, it's not divergent, but positive case scenario, if you're looking for the upside here, you've got a low here on the MACD, a low here on the MACD, and a low here on the MACD, which are all three of which are divergent. And the stochastic as well, you can see this clear uptrend here during this clear downtrend in terms of the low. So we've got this divergence, this the dynamic picture that we're looking at. And that kind of, I think, really kind of sums everything up. So, the last thing I suppose I could point to is, did we manage to do anything here on the GBTC chart where we're looking to see if this gap would get filled? We had a partial fill, you could say, if you want to use that flexible idea here on the GBTC. No, we didn't get it filled. We're still going to have keep that on our radars as well as sort of, going forward. And then I suppose if we want to sort of then as well wrap up, wrapping, then you can still see that we've got this formation on the charts that we've had drawn on for quite a while now, which has still got higher potential profit taking targets in mind, for instance 8,500 or whatever, and as far as 14,000, that's still on. Okay, that's still on. The trend here hasn't turned around quite yet, 24-hour chart, so gives you we're not quite there yet. We're not able to say that yet. Of course, though, everything's been great and everything's really great and looking positive and bullish. There's a lot to say. In terms of that sort of bullish scenario, if we look down to the 4-hour chart, it could be like saying, oh look, between these two highs, it's not divergent. We're getting this strength coming in. We're going to have a higher low anywhere down to just 6,260. It's a higher low in the 4-hour time frame, whatever. But we can check in again and all this in the next few. Well, that video that we've just made through here now, I think, should stand the test of time for at least the next 3 days, hopefully. Famous last words. Okay, thank you so much for tuning in. Thanks very much for being part of this experience here as we look at the charts and being part of it all. This would be nothing without you guys as the audience, and girls, of course, guys and lassies. So thank you so much. I massively appreciate it. Like, subscribe, and if you've got a friend that you think would like it, share it with them. Or if you're part of a group of interests, trading group or whatever on Facebook or whatever, give them a wee post there with a video. Thank you so much, and I'll see you in the next video, which will be tomorrow. We do these daily. Thanks so much.